Hi everyone, welcome back to the US individual taxation classes enroll agent part 1. This particular video is last in the series for chapter 2, which is income and asset. In this particular video, we'll be understanding in detail about adjustment to income. It covers 4 topics. The first one is self-employment tax. Second is retirement contribution, and the third topic we'll be covering is health saving account, and the last fourth topic we'll be covering is other adjustment. These are the adjustment to the income. So let's dive into to understand more in detail about all the adjustment to income. First one is self-employment tax. What is self-employment tax? When you are doing your own business, right, like a sole proprietary, or maybe partnership, or maybe S corporation, or maybe LLP, or maybe LLC. In that case of scenario, the owner is being like the partner or maybe executive or the person who is working for himself or herself, or maybe if you are practitioner, whether it's like doctor, lawyer, CPA, enroll agent, right? In that case of scenario, you are a self-employed. So in case of self-employed, there are certain amount of deductions is you are being eligible if you make those deposits of self-employment tax. What is self-employment tax and how much it will be? You need to deposit to claim the respective deduction. So let's understand that. For an employee, 1/2 of the social security plus Medicare plus railroad retirement tax are withheld from their wages, and other half is being paid by the employer. So generally, self-employment tax is equal to half of the social security, Medicare and railroad retirement tax, which is need to be withheld by the employer, and partly the same proportionate need to be paid by the employer. Same way how in India, if you see like in the PF, one portion you deposit as an employee and one portion employer deposit. Same is the case of self-employment tax. There also half portion you need to deposit and half portion employer need to deposit. For a self-employed person like a sole proprietor, they pay both employer and employee part, because when you are self-employed, when you are a practitioner, you are a lawyer, you are a doctor, you are an enroll agent, you are a CPA, or if you are doing your own business, if you have your own shop, right? In that case of scenario, you play both the role, employer as well as employee, right? And then you pay your part as well as the employer part both. To establish the equity between these two groups, the self-employed person can deduct 1/2 of the self-employment tax as an adjustment to the gross income. So two things. For example, you have a gross income of $100,000, and let's assume $8,000 you have deposited as a self-employment tax, and $8,000 your employer or as an employer you have deposited $8,000. So now total self-employment tax you have deposited $16,000, right? In this case of scenario, whatever you have deposited as an employer, so that amount of expense is being allowable expense to the employer for their P&L. But what amount you have deposited on your personal capacity need to be considered as a deduction from the gross income. That's what it means is. So let me draw an example for you. For example, you are an enroll agent firm. Let's assume Shubham and associate EA. So let's assume Shubham is a sole proprietor and running his own EA firm. So in the EA firm, you have P&L, right? In the P&L, you have, let's assume, sale of services. Let's assume $100,000. And you have expenses. Let's assume $50,000. and you have paid self-employment tax for yourself, let's assume $5,000. So your taxable income, business income, will be how much? $100,000 minus $50,000 minus self-employment tax. So this is your taxable income, right? And other than business, Shubham has, let's assume, interest income of, let's say, $10,000, and Shubham has a rental income of, let's say, $12,000. And now he has also paid self-employment tax of, let's say, $5,000. Now you need to calculate the total taxable income of Shubham. So in this case of scenario, you will consider, or you can say, of income. So first you will consider business income. How much is the business income? 45,000, right? Are you guys with me?
Yes, sir.
Interest income and rental income. So how much is the total income he has? $67,000, right? Gross income is how much? 67.
Yes.
Less self-employment tax paid. How much he has paid? $5,000. So what is the taxable income? This is how you need to calculate. Make sense?
Yes, sir.
So this $5,000 of self-employment tax paid as employer will be allowable expense for the business purpose, and this $5,000 which he has paid for himself is being allowable as a deduction from the gross income. Everyone comfortable? Any doubt?
No,
नहीं सर, ये मेरे को थोड़ा समझ नहीं आया कि वो 2 बार टैक्स क्यों भरेगा सेल्फ एम्प्लॉयमेंट.
नहीं, like in India, if you see provident fund, employee also deposit, employer also deposit, right? Yes or no?
Yes, yes.
So this $5,000 he deposit in capacity of employer, and this $5,000 he has deposit in personal capacity. So total deposit of self-employment is $10,000.
नहीं, बट जो आपने एग्जांपल दिया है वो अलग चीज है, और जो यहाँ पे शो हो रहा है तो खर्चा है. ये तो इनकम टैक्स मेरे से ले लिया, गवर्नमेंट ने ले लिया. मैं अगर इसको उस नजरिए से देखूं.
नहीं, सेल्फ एम्प्लॉयमेंट टैक्स इज लाइक अ सोशल सिक्योरिटी.
अच्छा, मेरा मतलब सोशल सिक्योरिटी वहाँ पे जो उसमें वो रहा है कंट्रीब्यूशन 10,000 रहेगा.
Yes, that will be a long-term benefit.
Okay.
sir.
Yes.
So sir, ये शुभम एंड एसोसिएट ये फर्म, ये तो एम्प्लॉयर का, like it's an employer, right? So like the one tax is paying for the firm and second is for the employee.
Yes, normally in India also, like if you see provident fund, so in the
Yes.
provident fund, employee and employer both contribute equally, and it go to the long-term employee benefit plan. So
Yes,
this
sir.
$10,000 will go to the social security and Medicare benefit of the Shubham,
Okay, sir.
which he or he will be eligible to take the benefit after the retirement or
Yes.
after 59.5 years of age. which we studied in during IRA also,
Yes, sir.
right? So this is about self-employment taxes. How much is the deduction available? 50% of the total self-employment tax, or you can say your own contribution of the self-employment tax. Now coming to the second topic, which is retirement contributions. So retirement contribution we have discussed in detail along with the IRA. So there are a couple of categories of IRA which we have studied: traditional IRA, Roth IRA. Within the traditional, deductible IRA or non-deductible IRA, right? All things we have studied earlier. So it's like in continuation of the same. So retirement contribution are another adjustment to the gross income, which include self-employed person contribution made to the SEP plan, simple plan, or qualified retirement plan like traditional IRA or Roth IRA. If self-employed individual has no other employee, then the contribution is reported and deducted on Schedule 1. So if you are self-practitioner, like for example, you have your own show in which you have no other employee and you are working at your own, right? In that case of scenario, as an firm, you'll be issuing Schedule 1. But if you have multiple employees, let's assume you are a doctor and you have 2-3 nurses, 2-3 medical staff, right? Let's assume you are 5-6 people and running a clinic. In that case of scenario, you need to issue Schedule C. So if you look at the second part, if the pension plan cover employee other than the sole proprietor, pension distribution are deductible on Schedule C, right? If you are doing as a single person, then you need to declare in Schedule 1. If you have like employees also who is working in your sole proprietorship, then you will be deducting in Schedule C. So it's only schedule which you need to use is being based on the category of employer you are. If you are just a self-employed and employing yourself, then Schedule 1. If you have multiple employees who is working in your sole proprietorship, then you will be reporting on Schedule C. Any doubt? So far, so good?
Yes.
Yes, sir.
Deductible traditional IRA contribution by a taxpayer and or spouse also are treated as an adjustment to gross income. So similar to IRA or deductible IRA. Coming to the third topic, health saving account. This also we have already covered. It's just a reiteration of what we have already studied in chapter 1 and 2. Taxpayer can deduct contribution made to the health saving account. Do you remember what is health saving account? We studied in adjustment to gross income, if you guys remember. Do you guys remember that logical flow of calculation of income and taxable income, which we studied, I think, in very first class, if you remember, or I can show you in the notes. It seems you forgot everything. Do you remember this very first class?
Yes,
which
sir.
we have discussed a lot of stuff. So do you remember this format of calculation of tax for individual?
Yes.
So gross income we discuss in chapter 1, deduction from gross income also we discuss in chapter 1. Then this is adjustment from gross income, which is standard deduction or itemized deduction, whichever is higher. Right? So we are studying this part, itemized deduction. So in the itemized deduction, there were all these things: contribution to IRAs, health saving account. If you remember, like this itemized deduction have These 6 items: medical expenses and insurance paid, state and local taxes paid, home loan interest and premium, charitable contribution, investment expenses. I'm not sure you still remember those or it's all gone. We discuss about this traditional IRA, deductible, non-deductible. Do you guys have some idea? Or it's been long time? You lost, huh? Anji? Yes, no? Mayank, Shubham?
Yes, sir.
Yeah. Okay, so taxpayer can deduct a contribution made to the health saving account. So health saving account is a check account in which you deposit the money so that money you can utilize in future for any of your health benefit. So that is called health saving account, in which you make a contribution, you deposit the money, but that money you cannot use for any personal purpose. That money can be utilized only and only for the healthcare purpose of yourself or for your family, whatever the, you can say, basis for which you have created and opened the HSA account, right? So in this, eligible individual are covered under the high deductible health plan on the first day of the month, have no other health plan coverage except what is permitted, and are not enrolled with any Medicare, can't claim as dependent on someone else's tax return. So these all conditions need to be satisfied. Then the amount an eligible person has a contribution to the HSA depends on the type of HSA, age of the individual, date they become eligible individual, and the date the person ceased to be an eligible person. For 2021, the qualified person that has self-employed can deposit or contribute up to 3,600 for himself, and if he or she wants like family coverage, then up to 7,200 they can deposit. So employer contribution, the amount of taxpayer can contribute must be reduced by any amount contributed by the employer. So 3,600 for individual contribution and maximum 7,200 for the family contribution you can make to HSA, and you can claim up to that amount as a deduction. But if your employer is also contributing something for HSA, then you need to reduce that amount from 3,600 or 7,200 as the case may be.
So like HSA like benefit क्या हुआ? ऐसी conditions ऐसी हैं जैसे HDHP होना चाहिए and नहीं होना चाहिए. So like इसका benefit क्या हुआ HSA का?
No, it is just you are parking into the HSA account and you are just intimating the government, I have parked this amount for my healthcare benefit, and you can claim that amount as a deduction into your income tax return up to $3,600 for individual, and if you are contributing for the family up to 7,500, whether you are using or not.
HSA open करते हैं तो इसके साथ मान के चलो मेरा एम्प्लॉयर मुझे इंश्योरेंस नहीं दे रहा है तो मैं मार्केट से भी इंश्योरेंस नहीं ले सकता जैसे पॉइंट भी लिखा हुआ है.
हाँ नहीं, if your employer is providing, then to that amount you need to reduce out of this limit. So for example, $2,000 is the employer contribution, right? And you are contributing for individual, then 3,600 minus 2,000, only 1,600 deduction you can claim. Right? Yes. Last one, other adjustment, which is student loan interest. A student loan interest may be a deduction to gross income depending on the modified AGI. The deduction is gradually phased out for the taxpayer with modified AGI between 140,000 to 170,000 if the taxpayer married and filing jointly, and if taxpayer is individual, then 70,000 to 85,000. That's a phase out limit. Taxpayer cannot claim the deduction if modified adjusted gross income is 85,000 or more in case of individual and 170,000 or more in case of married filing jointly. So student loan interest deduction. Then last one is alimony. Alimony we all know, before 2018 you can claim that as an expense. But if the alimony is on account of divorce degree after 2018 or maybe from 1st January 2019 onward, then you cannot claim that as expense, right? And here, like child care expense is not treated as alimony, right? And then after the death of like spouse, you cannot claim that. So those are two things you need to keep in mind. Last question of the day. What is your maximum allowable deduction for the contribution to the Roth IRA if neither you nor your spouse was covered for any part of the year by employer retirement plan in 2021? What is the maximum contribution you can make?
12,000. If above 50, then it's 14,000.
Yeah, so 6,000 if you're younger than 50, 7,000 if you're older than 50. Both answer choice are correct. Neither answer choice is correct. Okay, so what is the question? What is your maximum allowable deduction for the contribution to the Roth IRA if you nor your spouse was covered for any part of the year by the employer? Yeah, it should be like $12,000. So neither answer choice is correct considering they are filing jointly, right? Cool, this is it. I think we are done with chapter 2. Any doubts so far? Yeah, Mayank, Rajat, Shivam,
No.
Divya, Garima, all
सर
good?
डिप्लीशन वाला एग्जांपल आपने दिया था ना जिसमें अमाउंट बढ़ गई थी ईयर 2 में और आपने कहा था उसको ऐड बैक कर सकते हैं सर एक बार वो समझा दो
One second.
वो ऐड बैक वाला कॉन्सेप्ट नहीं समझ आया मेरे को
So this add back will only in case of when you are using alternative minimum tax. In the normal tax, if you are using normal tax, then no add back is required. But if you are using alternative minimum tax, then only this $10 million you need to add back into income and consider as income of the year.
और इसके ऊपर टैक्स लगेगा?
Yes, and the minimum tax rate, which is 15%, not 25%. And that also you will get the credit in future when you come to the normal tax bracket.
अच्छा.
Right? So there are two taxes. One is like normal tax. One is alternate minimum tax. Alternate minimum tax, that government says minimum this much amount of the tax you need to pay for certain category of income. So in those certain category of income, this $10 million is being considered.
अच्छा.
Right, everyone?
ठीक है.
Mayank, Sachin, Vivek?
Sir. Yes.
Yes, sir. Yes, sir.
Cool. So we are done with chapter 2. You guys go ahead and do all the revision